everyone, Top Trader Michael here again, and today I'm covering the change in CrowdStrike since I initially posted my analysis. It's been about 2 months. I posted it at 423 a share. It immediately dropped, went back up, dropped again, and now we're on a super huge rise. We're up about 40 to 50% from when I published my analysis, depending on when you want to call the price. I think that right now it's a very interesting time, and I just want to take a few moments and kind of explain where I see the stock right now and how it's moved. So obviously it feels good, up 40%. I bought some more down here personally, and I think that now is a decent time. I've been taking some profits personally. So when I originally looked at CrowdStrike, the thesis was pretty straightforward. It's a company sitting in the right intersection of AI, cybersecurity, and cloud, and there are big trends around each of those. So their platform, their subscriber revenue based approach, everything that they were doing, I really liked. I think there's still some value there, and I think that that is still true. But what's interesting here is that fundamentally the business hasn't changed much in the past few months. But what has changed is how the market is pricing it. So we've seen zero earnings calls. The last earnings call was March 6th, I believe, maybe hereabout. And so I said, I think it's a good stock. I listened to their earnings call. I liked it. But in this entire run up, all of this noise from going down from 360 a share to now 600, almost 20 a share, it's all been based off valuation expansion and readjustments. So I haven't seen any major changes from the company in terms of their projections and such. But it's very interesting because now the market seems to be getting on with the narrative. So finding a great business is one thing, but the real edge comes from finding it before the market fully agrees. So for me, it's less about was this the right call to what does the risk reward look like from here. Right now at 620 a share, you're holding CrowdStrike, which is a $150 billion company. There's a lot of risk that goes along with that. And honestly, if you bought in at a reasonable time around here and you feel comfortable taking away some of the position from that, I would not say that that is unreasonable because personally, obviously everyone should do their own due diligence. There's a risk, reward, whatever. There are some charts that look like this, and then they just keep on going up and up and up. There are charts that look like this, and they could double back right away. So when we zoom out a bit and actually look at the chart as a whole, I don't do things necessarily based off the chart. But if you consider how the chart's been going, I mean, this is par for the course. This is a very aggressive run up, though, in the past month. Very aggressive for a stock to just go up so high. So they haven't been able to change anything. Maybe some of the things they've been doing are finally getting realized. I obviously do like the company. I like the stock. I'm not saying that I think they're just going to go down to zero, but I think long term from here, there might be better places to put dollars, especially that are historically more safe. At the same time, I mean, you're getting AI cybersecurity in a company that you can invest in as a single stock that is a publicly traded company that trades for under $250 billion. You think about some of these other companies that are pushing trillion, $2 trillion valuations. Like there's potentially a lot of value here. And for CrowdStrike, I think long term, $1,000 a share is not unachievable. I actually could see that in the next 2-3 years. I just don't know if it will be so immediate, and it's definitely a risky stock. So I just wanted to highlight now for anyone who saw that initial video, who may have made a trade or two based off of it, that now we're at a higher price per share, the 620 a share, and potentially it's time to reevaluate what that looks like in your portfolio and how you're doing as a whole. So as always, this is just educational advice, educational information, I would say. So do your own investments as you feel fit, but let me know if you have anything to say in the comments.